Oil prices moving higher, with Brent crude looking to wrap up the week with a 9% gain or so. That's, of course, pushing global stocks higher. Let's get to London now. That's where Spencer Welch joins me. He's an oil analyst at IHS. And Spencer, what do you attribute the rally in oil prices to?
Morning, and thanks for having me on the show. I think the main reason for the rally is continued speculation that some of the oil producers may meet and freeze their production at the current levels.
And it seems as though reports are surfacing that OPEC and Russia will meet in March. But how confident do you think how confident are you that we'll get an agreement that some sort of production freeze will come together?
Well, in reality, whether there's an agreement or not, it really doesn't make much difference. Fundamentally, so both those countries are already producing at very high levels. The market's already oversupplied. So if they just say, yes, we're going to carry on producing at our current high levels, that's not going to help rebalance the market. The only thing that is going to help rebalance the market is if any of those countries decide to cut production.
And earlier this week, we had the oil minister in Saudi Arabia dismiss the possibility of a production cut.
Yes, that's absolutely right. At the IHS CERAWeek conference in Houston, Al Naimi said, yes, there may be an agreement to freeze, but it's very unlikely there'll be an agreement to cut. He said Saudi Arabia wouldn't be part of that. So he dismissed that, and that had a bearish impact on the oil market.
So with all this in mind, where are oil prices going? Are we going to just stay in this narrow range of between $30 and say $35 a barrel?
We think that's most likely. Actually, we think there's potentially more downside risks, so maybe dipping below 30, but no significant recovery in the first half of 2016. Maybe in the second half of this year, we still at IHS we expect the market to come back into balance with some increasing demand and some declining supply of oil, and then maybe in the second half of this year we might see the seeds of a slow price recovery.
And in terms of the broader impacts of low prices, clearly good for the consumer, but should investors be worried that low prices could cause a global recession?
I think as you said, it's very balanced. There's almost equal winners and losers with a low oil price. There might actually, in the sum of things, be better for the global economy having a low oil price, but I think that's debatable.
All right, Spencer Welch, an oil analyst at IHS. Spencer, thanks so much for joining us.
Thank you.
I'm Scott Gamm, and you're watching The Street.